Hi, so my name is Tessa Carver, and I work with the Community Development Office of Utah. In our office, we help with a lot of rural planning, and really we just want your community to be independent and self-reliant and have the resources it needs. So today I'm going to be talking about understanding municipal finance, and specifically providing an introduction to the Comprehensive Annual Financial Report. Now we'll go into a little more detail about what that is later in the slideshow, but I just want to add that when you can understand parts and what is happening in a comprehensive annual financial report, this can really help you protect your city. And again, so as I've been preparing this, I was trying to think of what could make municipal finance interesting, and some people just don't find it interesting. I do, because I got a master's in public administration and I specifically studied finance while I did that. But not everyone likes it like I do. But bankruptcy and fraud are usually pretty big deals, especially because they can still happen to municipalities. Since 2010, there have been about 70 municipalities that filed for bankruptcy, and on this map you can see just the ones that have filed in 2020. It doesn't matter if they're in urban or rural areas, this can happen all over the country. And it could probably happen here, although luckily cities have been managed well enough to not do that. But another thing that can happen here in Utah is that fraud can be a significant issue for municipalities. So, Rita Crundwell, she was the subject of the documentary All the Queen's Horses in the town of Dixon, Illinois. She stole $53 million over the course of 23 years from the town that she worked for. The town had to make a lot of significant cuts while she ran a horse breeding business. These small towns are not immune. Dixon had about 16,000 people. While it's not very small, it's really not that large either. And Utah is the fraud capital of the world. And fraud can be the result of mistakes at times. So understanding and accurately reporting finances is key to effective and safe governance. More eyes and more knowledge about municipal finance can help prevent bankruptcy and fraud. Okay, so next I'm going to define what a comprehensive annual financial report is. So all municipalities in the state are required to submit one of these financial reports. I'll refer to it as a financial report or a CAFR, C-A-F-R. That's what kind of the finance sector refers to it as, but a financial report is a great way to refer to it too. So formally, it's a set of financial statements that a state, municipality, or other governmental entity creates that comply with the accounting requirements established by the Governmental Accounting Standards Board, or GASB. And these standards can change. They're usually pretty consistent, but they do change in slight ways a lot. And so having someone help you prepare this and audit this, if it's fiscally viable, will be really useful and just a best practice overall. Cities must submit an audited report, but towns are only required to submit a report, but it does not have to be audited. But again, auditing reports is a best practice when it's a fiscal option. So next I want to go over what the sections of a CAFR are. First, there is the introduction. The introduction is unaudited. It has just the title page, things like that, and it's mostly organizational information. It will provide usually organizational information about the city, who the city council and mayor are and who any city employees that may work on this are. And the next section is the financial statements and analysis. This is the key section. It's the only one that's audited, and this is where you find out all the numbers regarding your finances. This is where the report is. It's audited, like I said. It includes a manager's discussion and analysis that we'll talk about, and the basic financial statements. And the financial statements are for governmental and enterprise funds. So this means your funds that are collected through things like tax revenue, and your enterprise funds are funds that are created from service or business-like activities that a municipality takes care of, like water, sewage, garbage, just things like that. And finally, in this, there's the notes to the financial statement. And the notes, if you can't find anything in the financial statements, the notes provide a lot of detail about what funds are, what goes into those. They have a lot of really good information. And finally, there is the statistical information. It's unaudited, and it includes trends, demographics, and operating information. So this just shows what the city is like, what it's like to live there, and what the city is seeing as it moves forward. So next, I'm going to go into the manager's discussion and analysis. So this is what the town wants you to know about the reports, and if you're a town creating one of these, this is where you put your highlights. This is the section that if you only read this, this is what they want you to know about how their finances look. So it includes summary information, financial highlights, and a 2-year comparison. The financial highlights provide a quick glance of finances, but not the details necessary to give a full picture of the financial state of the city you're looking at. But a 2-year comparison can provide insights on improvement or worsening conditions for a city. And I'll say this again, but because it's so important. It's so important that when you're making these comparisons, you look for anomalies that happen every year, but overall you want to look at these comparing 2, 3, 4 years at a time to see if there are trends in financial patterns. So 2 years is a great place to start, but if you can, look at the financial reports for a few years back just to see what the trends are for the city. So next we're going to talk about the basic financial statements. These are really detailed, and the bulk of the financial report is in these. It'll take up at least 50% of the report, if not 80. These are the report. So first is the statement of net assets. And the statement of net assets is what the city owns and what they owe to other organizations or people by the end of a fiscal year. So it's also called the balance sheet, and it shows their assets, their liabilities, and their fund balances. This is taken at a static period in time. Next is the statement of activities, or an income statement. These are pretty similar to the statement of net assets. They inform each other, but this shows what the organization earned and what they spent. This is all about tracking where money went and where it came from. And so this is also sometimes called the statement of revenues, expenditures, and changes in fund balances. And finally is the statement of cash flows. This shows how money moves throughout the city throughout the year. So this shows if it's going to debt, if it's going to other organizations or funds. This is our first statement that we create to see where our cash moved, and then we include our other activities and assets that have financial ramifications. So, like I said, please compare these statements over a number of years. You can't just look at one year and say, like, oh no, we're going to be bankrupt. If that happens, you probably could have seen it years before. But being able to identify what you need to be looking at, where anomalies are, or where there are potentially financial health issues is key. So we could spend hours going through this, but I just want to say these statements are complex and you might not understand everything on them. I don't always understand everything on them. But rather than attempting to go over everything you're going to see on these, I want to go over a few ways that you can look for financial health in the statements so that you can recognize when there might be issues, when you need to look for trends, and areas that you can improve. So first, we are going through our statement of net assets. So first, let's just go through, like I said, our signals of financial health. We can look at our cash and cash equivalents. If a city doesn't have very much cash, that can be bad. That means they don't have very much money to actually spend with them. Cash can give you freedom when things cost more than you thought, or when there's a special project you want to engage in. But if your cash is really, really high, that means that there may be some poor practices in how you're spending, allocating towards debt, or you may have too high of tax revenues or enterprise collection fees. It just needs to generally be somewhere in the middle, and that's really arbitrary for different cities. But when you compare it to the other numbers in the financial sheet, you'll understand what is a healthy range. So next, having a healthy unassigned or unrestricted fund balance is really key to having freedom throughout the year to engage in projects and other activities that you want to do, but you don't have things specifically assigned to. Because if it's an assigned fund balance, that means that the city has to pass an ordinance or get city council and mayor consent to change that. That takes a lot more effort. It's a lot more difficult politically. And it's assigned for a reason. You need it in the places it's assigned usually. So making sure that you have money in that fund balance is critical. And finally, just check out your capital assets and depreciation. You compare your capital assets to depreciation. If your depreciation is a high percentage of capital assets, that's risky. That means they're losing more value comparably more value than they're worth. And you want your assets to create healthy net worth for your city. So now we are just going to take a minute and look at this fund for a town here in Utah. This is an unaudited report. And I just want you to pause the video for a minute, look at this financial report and tell me what issues on this statement of net position you see. Okay, so I take it you've looked and unpaused it, and you may have found issues or had questions that I haven't identified, but that's great. That provides more practice and more insight for you. What I found was that this town has no unassigned fund balance for their governmental funds. This means they don't have anything in their general fund or capital projects funds that's very flexible. It's all assigned somewhere. So if they need a little extra cash, that doesn't seem very available right now. And they do have some in their water funds, but The rest of it is not really assigned, which means they don't really know what they're doing with their water funds, and and that means that citizens can't really know what they're doing with their water fund. So hopefully you've learned a little what this looks like and how to start to look for things. Next, I'm going to go over our statement of activities and the signals of financial health for this. First, you want to look at the revenue sources. Is it your city may have a property tax or a sales tax or both, but if you have a high sales tax rate or the percentage of your revenues that are from sales tax is greater than property, that means that your city becomes a lot more vulnerable when there's a recession. It doesn't mean that it's bad and it can provide good income, but when there's a recession, people typically spend less money, they buy fewer things, and when you have significant sales tax, that means you're getting less revenue. Whereas all the property has value and can still be taxed, even if people aren't buying new property. So next, look for transfers in and transfers out of different funds. This may mean this at times can be a really normal, good practice, and so it's important to understand why they're transferring it, but other times this means that they're just cross-subsidizing budgets because they don't have enough in, say, their governmental funds to cover all their projects, so they take it from their enterprise funds or vice versa. This means that there's probably an issue in either their spending or their revenue sources for each of the budgets if they continually have to cross-subsidize their budgets. Next, we will talk about the intergovernmental funds. Intergovernmental funds are money that's received from other governmental agencies, perhaps the state, the county, or another agency. And if a lot of their revenue comes from other governments, that means they're not very independent. And like I said, at CDO, we really want you to be independent and free in your city to do the things that are best for your residents. And so while intergovernmental funds are a really great way to help your budget, it shouldn't be a major part of any budget. Next and last, not last, sorry, I have one more after this. You want to look at your revenues compared to your expenditures. This is a good practice for anyone, municipalities or just people. You want to be earning more than you're spending. You want a positive final balance. And that's the last thing I wanted to mention. The final balance should be positive. This is just an area where you don't want to be in debt at the end of the year. You don't want to have money or costs that you don't know where the money will go to for that or come from. And so just striving to always have a positive final balance will be a really good practice. So this is a statement of revenues, expenditures, and changes in fund balance for governmental funds. Again, I want you to pause the video, look at this, see what issues you find in this statement of revenues, expenditures, and changes in fund balances, and then I will let you know what I found. So just take 1 minute to pause it. Okay, so I think that you're back. So let's go over a few of the things I found. First, their sales tax in this city is significantly a higher portion of their revenue than property taxes. It's almost double. And while there are lots of other revenue sources for this city, in the case of a recession, this means they could be losing a significant portion of revenue from taxes, which is just like a risky place to be, especially if there's not really any savings efforts. So next, in their total governmental funds, there is a deficiency of revenues under expenditures. So they are spending more than they're making. And finally, here you can see the transfers in and out between budgets. So we know that money is being transferred out of the general fund, and some of that is going to non-major governmental funds. Some non-major governmental funds are going to the general fund, and others are probably going to their enterprise funds. And these financial statements will be laid out later in this for this specific report, if you were to go in and look. So their revenues are not meeting their needs, and they're having to draw from other sources, and they still end up with a negative final balance. So just for 1 year, this may just be how things go. Everyone experiences financial bumps or hardships that they weren't anticipating. But if this was happening 2, 3, 4 years in a row, that would be time where you really need to consider what you're spending, how you're spending, and what your city really needs versus what you can afford. So, last but not least, we're going to go through the signals of financial health for a statement of cash flows. So this is pretty basic, but you want to look at the major purchases. Just see where your municipality is spending money. The most significant purchases you're making are towards debt, that it's important to know why. Is that because you have an exorbitant amount of debt, or is it because you want to take time, pay off your loans, make sure that you're okay before you start new projects? That's great, but if you're just in a place where you have so much debt that most of your spending just has to go to debt, that's not really where you want to be. And finally, you want to look at the net cash for the statements of cash flows. This is just how much actual cash does the city have? What can we actually spend? What can we actually use? This is, again, a good practice for everyone, but just having the availability of funds for emergencies is really, really helpful. So, here's our last example, the Enoch City statement of cash flows for their proprietary funds. So these are business type activities. So just take a minute, pause the video, see what you find, and then we will come back and I will let you guys know what I found. Okay, so I take it you have unpaused it. So here are the issues I found. So first, they're transferring a lot of from their sanitation fund to their general fund, even though they're spending more cash in that area than they're earning. So they're kind of in the red here already, and then they're putting it towards their general fund, which may mean they need to raise taxes, or it may mean that they simply had an off year where they felt like this was the best way to sustain them. So look at a couple of years, see if this is a common practice. But know that right now they're using more cash than they're earning. But even from what they're earning, they're transferring that to other areas. And finally, I found that their operating income is negative for their water fund. That means the whole fund is earning less than it's spending. This could be, again, a weird year, bad year. Look at the notes, see what you see. But it also could be that they have low water rates. And while it may be unpopular to raise them, gradually raising them could help improve the fiscal viability of the water fund so that the city has the ability to keep providing that service to their residents. Because significant time in the red will just make it so you really can't help your residents in the long run. And this is what this is about, doing what's best for your city, for the people that live there, and managing the funds that are entrusted to you. So I hope if you have more questions, you will look at some of these resources. You can reach out to the auditor's office for the state of Utah, and they can help you through this process. And you can reach out to our office, the Community Development Office, at community@utah.gov, and send us an email. We'll see what we can do to help. And we look forward to hearing from you. Thank you.